These were the best 5 money market funds in year 2024. The 5 have remained unchallenged and is resilient in the top 5 category in performance, giving alpha returns to their investors. Some have demonstrated the longest resilience, remaining unchallenged in the top 1 and 2 categories over the last couple of years. In the midst of steep declining interest rates from highs of a 16% to a current low of 12.25 in the 382-day Treasury bill and 11.3% for the 91 and 182-day Treasury bills. These 5 money market funds have continued to give us higher returns compared to the market interest rates, to highs of above 300 basis points above the market interest rates. Somebody would ask, where are these money market funds or the fund managers investing their money? Because majority of us think that the only avenue to invest money by these platforms is on the treasury bills and bonds, the government instruments that are issued to borrow from the domestic market by the Central Bank of Kenya. We'll be looking at the specific places where these money market funds were investing their money throughout the year when we look at the asset allocation schedules and the portfolios after 3 seconds break. We'll also be looking at the growth patterns for the 5 money market funds over the period ranging from the second quarter to the third quarter, and how well these money market funds grew. We'll also look at the average changes in their returns to investors when we compare to what they were giving investors in the second quarter and what they are giving currently. And what is observable is that these money market funds have remained giving us high returns despite the declining inflation rate, which today registered a low of 2.7. But by the time of making this video, that is the end of November, the inflation rate has started rising, reporting a meager increase to 2.8%. But what is important to note is that these money market funds have remained unshaken despite the declining market interest rates and inflation rates. We'll be looking at the returns, the growth, and profile or the asset allocations for these money market funds after 3 seconds break, so don't go away. In the meantime, as always, don't forget to like this video, share this video to another person, and also always engage us in the comment section, because we'll always come back to check on what you are requesting from us, and we'll always reply to your comments almost immediately. If you are new to the channel, welcome, and here we give a minimum of 3 value-packed videos. Hit the notification button so that YouTube will notify you when we upload the next video. See you after 3 seconds break. Welcome back, and thank you for liking the video, your comment, and share. We'll begin by looking at the returns when we look at what these money market funds were giving the investors by end of September and today, that is by end of November. In September, as per this schedule, the money market funds were giving us in average over, the top 2 were giving us over 18%, while the other 3 were giving us over 17%. If you look at the schedule for end of November, we're almost getting the same figures despite a slight drop, but it's notable that the first money market fund, that is Saiton, has remained resilient and has given us continued giving the same rate averaged throughout the period, and it has maintained the over 18% return in November. Resilience is not avoiding the fall, but rising stronger after the fall and pushing through the impossible and emerging stronger on the other side. Saiton has continued giving this kind of a return amidst a lot of noise regarding its other products that were not regulated and which sang with individuals' money. But despite of all that, we have to look at where Cytod invests its money, because for you to be giving a rate higher comparable and constant comparable to the other, equally good doing money market fund, there should be something that this fund manager is doing different. And that is what we shall be looking at when we will be looking at the portfolio spread or the asset allocation schedule, comparing the 5 fund managers in their money market funds. Considerably, we will also be looking at the growth pattern for the 5 money market funds. But what is important and notable is that despite the declining market interest rates, which have fallen to a low of 12.5% by end of November, and that is measured using the 364-day treasury bill, while the other two bills, that is the 91-day and the 182-day treasury bills, they registered 11.3%. But the market interest rate is denoted as the return that is given by the 364-day treasury bill, which stands at 12.5%. The question would be, why are these money market funds still giving us alpha returns when compared to the market interest rates? That is the reason why in the comment section we have so many individuals raising questions and pointing towards danger, foreseeing danger when it comes to the returns that these money market funds are giving. But the most important thing to consider is, are these fund managers investing in the government securities? Because the government securities is given by the banking sector regulator, that is the central bank. Those rates given by central bank are immediately supposed to affect the treasury bills and the treasury bonds and the bank interest rate when it comes to lending. And therefore, it can be an attempt by the CBK to make bank loans cheaper or more affordable by local investors in the business community. Therefore, if the fund managers are not investing in those government instruments and they are investing elsewhere where they are able to make better returns, then obvious they will be able to give these alpha returns to their investors. So it's important we look at the asset allocations before the close of the video to determine where else these fund managers are investing and look at the differences. Who is investing differently from the other fund managers to establish whether that could be the reason why that fund manager is giving us higher returns compared to the rest. So for the period, we have concluded that they have continued with their resilience and giving us those returns. So the next important item to look at will be the growth pattern. And as per this schedule, we are comparing the period ending in quarter 2, which is June, and the period ending in quarter 3, which is September. Now in October, November, and December record quarter 4. Each quarter has 3 months. And therefore, when we compare quarter 2 performance and quarter 3 performance in terms of growth, we will notice that the 5 money market funds or the 5 fund managers, the category of a money market fund, they all had an upward growth, registering highs of 80% in their growth, almost doubling their portfolios in the money market fund. And as per this schedule, you notice that the fastest growing fund manager in the category of a money market fund was Ethica Capital, that had 4.6 billion worth of investments in the money market funds as compared to 2.5 billion by the end of quarter 2, and that gave us a rise of over 2 billion worth of investment in the money market fund, and that gave a rise to a net increase of 70.81%, giving Ethica a control of 1.5% of the fund or collective investment scheme market. We are talking about net growth because there are those top-ups and new investments that came into the fund managers and what was withdrawn from that fund. And therefore, a net growth means that the amount of investments that were registered during the period are higher than what was withdrawn from the fund during the same period. The second one was Loft Carbon, which by end of quarter 3 grew to 2.16 billion compared to 1.3 billion in quarter 2, and that amounted to 848 million in growth, net growth, registering a 64% growth, and that gave it a 0.7% market control. The third one was Cyton Money Market Fund, which stood at 1.5 billion by close of quarter 2 from by close of quarter 3 from a high of 1.2 billion close of quarter 2, and that amounted to 251 million and amounting to a 19.5% net growth, giving Cyton a 0.5% control in the collective investment scheme market. The fourth one was Kuza Asset Managers Money Market Fund, which grew to 803 million in quarter 3 from a low of 491 million in quarter 2, registering a 312 million growth amounting to 63%, which gave Kuza Asset Managers a 0.3% control of the collective investment market. And the last one, or the fifth one, was Avocap Asset Managers, which registered 170 million in asset management, and Avocap, having started its operation around June 2024, it did not register any records for the period closing in quarter 2, and therefore this was the first time Avocap is being reported, and therefore we cannot say this was incremental growth, but this was their first record as per the regulator, and therefore we'll be getting the records of growth in quarter 4 reporting. Considerably, that gave Avocap, by assuming that 170 million worth of investment, took a 0.1% market in the collective investment schemes. The third and very important aspect to look at in terms of the growth, performance, and resilience in the 5 money market funds is the asset allocation schedules for the 5 money market funds. These schedules are as per the reports given by the regulator, that is Capital Markets Authority, and we are spreading out the asset classes that the money market fund held by the different or the 5 fund managers was spread out. And from this schedule, we are able to tell the difference or what fund managers were doing different from the others to remain resilient and unchallenged in the top 5 categories as follows. As per this schedule, you notice that we have taken the quarter 3 or the total assets under the control of the asset manager by the close of quarter 3 in their money market funds. And if we look at the first one, or the largest fund that was held by Ethica, and it's about 4 billion shillings, 2% of that portfolio sits in cash and demand deposits. Then a 39% has been invested in fixed deposits. Listed securities, these are the securities in the stock exchange, they had a 0% investment, and the government securities, these are the treasury bills and bonds, Ethica invested close to 50%. Half of the entire fund, money market fund, sits in the government securities, with zero investment in collective investment schemes and unlisted securities taking a paltry 9%. So if you compare the investments, those investments with the others, in the category of cash deposits, cash and demand deposits, Lofty Carbon has only 1%, Cyton has 8%, Kuza has 12%, and Avocap have 21%. Fixed deposits, which appears to be the most preferred form of investment by the fund managers in the money market category. The fixed deposits assumed the highest chance of investment, whereas we had earlier spotted that Etika had 39% of the fund, but we have Lofty Carbon having almost their entire money market fund sitting under fixed deposit, because that one took a 90% of the entire money market fund with Lofty Carbon in fixed deposits. We have Cyton have 40% sitting in the fixed deposits. 39% of Kuza's portfolio in the money market fund has been invested in fixed deposits, and Avocap have invested over 50%. To be precise, that is 56% of the money market fund is invested in fixed deposits. That is to say that the top 5 money market funds have very little investment in government securities. Yes, they have a part of their portfolio in the money market funds with the government securities, but majority, the greatest percentage of the portfolio sits in fixed deposits. And that is one of the main reasons why these fund money market funds, or the fund managers, have not been hit by the continuing declining trend of interest rates in the market, because the primary instruments that are affected by these declining interest rates are the government securities and banks' lending rates. And therefore, for that, or for this shift in their investments, they have protected their investments from the effects of the declining inflation and the declining market interest rates. And for that reason, they have guaranteed their investors prolonged alpha returns despite the declining interest rates and inflation rates. And that gives you a good answer as to why these 5 money market funds and the other money market funds with similar asset allocations will continue giving you greater returns compared to the interest rates in the market. It's because they have not invested in the primary instruments that are being directly affected by those declining trends. We possibly expect that these rates will get readjusted as the market adjusts itself, but slowly. The effect will be so small because a greater percentage of the fund is not being directly affected by those rates. And that's why we say these returns from the money market funds are benchmarked on the average return. So it is the average returns from the government securities over time that will see changes in the money market rates, and that may take a little bit longer to be felt. The other important cluster to look at is now the investment by these fund managers in the government securities. And you spot that the 5 fund managers, almost all of them, except Etika, they invested less than 30% of their fund in government securities. It is only Etika Capital that has invested a huge chunk of their money market fund in government securities. And therefore, if this declining trend continues in the long term, we are possibly going to see Etika's interest rates in the money market fund going down. But because Etika has to protect its position and its good performance to its investors, we are expecting a shift of that higher percentage in the government securities, maybe towards the fixed deposit category or another cluster of assets, in order to maintain their higher returns. one important management tool by the fund managers. They are able to adapt to markets, and they also have to carry out mitigation measures to ensure that they do not become uncompetitive in the market. And therefore, the most probable action by Ethica will be to shift that portfolio from the government securities that will have gone low in their returns to another asset class to maintain them, giving the high returns back to the investors. Because the Lofty Carbon have zero investment in government securities. We have Cyton have only 17% of the money market fund sitting with government securities. We have Kuza, they have invested approximately 21%, and Avocap have only invested 23% in government securities. Then what is this that makes Cyton outstanding? Or from the fact sheets, which asset class or what is it that Cyton have done different from the other asset managers that you can pinpoint as a difference and possibly which could be informing the higher rate by Cyton compared to the others? It is notable that 35% of Cyton's fund in the money market has been invested in collective investment schemes. They have a 35% compared to Kuza's 7% in collective investment scheme. The other three have invested 0% in collective investment scheme. And for us, we feel that that difference has been occasioned by their 35% in collective investment scheme. And lastly, Kuza has also invested in unlisted securities to a tune of 21%. So that is what informs the continued resilience by the top 5 money market funds. And that is the same place where we expect to be seeing a majority of investments come year 2025. We wish you a fruitful investment journey. Thank you for watching.